Good morning, this is Mayor Valensky with Driving Markets, driving while talking about markets. Evergrande, I've mentioned Evergrande several times, many times on this channel and on my other media. Evergrande, the biggest Chinese property company, one of the biggest in the world, if not the biggest in the world, again has been suspended on the Hong Kong Stock Exchange. This time it's due to surveillance on its CEO. It's just done a refinance package after it went bankrupt, or Chapter 15 protection in the US, came back to China, did a refinance deal, hoping to be reflated. The shares jumped from 22 cents a few weeks ago up to 72 cents, and now they're back down to 32 cents. Evergrande, the Chinese property company, is kaput. It's finished. Over, not going to happen. The Chinese property sector is in a shocking state, and it's going to continue falling. It's not going to resuscitate itself. It's going down. In fact, overall industrial production, overall industrial activity, overall employment, overall sales, imports, exports, as far as China is concerned, it is on a trend down. Now, I know a lot of people live in China, and a lot of people are over expats, are living overseas and are swearing by China. It is a structured society, absolutely correct. It's got all the facilities. As far as the economy is concerned, Xi Jinping doesn't have it right. He's got it wrong. He's put far too much regulation and far too much legislation on the small businesses. Remember, China's economy is made up of 60% small businesses. So if the small business is suffering, then China overall is suffering. And what we're going to see potentially is another Japan, which will be 10 years of stagflation, or 10 years of stagnation, no growth. And that is a reason why a lot of companies are now pulling out of China and they're relocating elsewhere. So as far as China's concerned, it's going to go through very testing times. And those people are going to give you a lot of pushback on that, a lot of opposition. I get it. I understand you. It is the number 2 economy in the world, but it is going to slow down. Meanwhile, over in Wall Street, again, we're back to the interest rate inflation cycle. There's a fear of inflation going up. It is going up. Inflation in South Korea went up. Inflation in Australia went up. Inflation in the US headline went up. Core inflation stayed the same. This week we have the PCE, personal consumption expenditure, the most favored measure of inflation as far as the Fed is concerned, the central bank in the US. That would be an indicator as to where the US is going regarding inflation. I'm stating for the record, inflation is trending up, and in the UK, inflation will be trending up. Look at oil. Oil is running now at $95 a barrel on Brent crude. I've been saying it's going to go to $100 a barrel. And yes, look at 10-year US Treasury note yields, 4.60%. I called it up to 4.5 when they were 3.9. At 4.34, I've said it's going to go to 4.6. It's up to 4.6 yesterday, touched 4.64, highest in 15 years. Indication that interest rates are going to go higher in the US. However, bonds have been trashed, and I've got a very serious colleague who says now's the time to get into bonds because the price has been hammered. And yes, it could be an opportunity to get into bonds, just to put that on the record as well. You can expect more volatility on Wall Street. Wall Street's trending down. However, come October, I reckon there's going to be an aggressive bounce as far as equity markets are concerned. This is Mayor Valensky with Driving Markets. Share, subscribe, comment. Catch you later.